webinar organized by Wider Perspectives Limited. This is the 6th in the series, and we are glad you are able to join us. We are a management consulting firm helping businesses to strategically identify growth areas and harness them in order to achieve sustainability. Our focus for this year's webinar series is on strategies for business sustainability. Understanding how critical it is to keep your businesses a going concern, even in these uncertain times. We have been discussing topics pertinent to business survival, like thriving in uncertain times, cash flow management, innovation, leveraging on technology, and funding through private equity. My name is Jacob Abaye, and I'm the Team Lead Sustainable Development of Wider Perspectives Limited. It is my pleasure to be your host today with my colleague Adaobi Ome, the Team Lead of Wider as co-host. She will be coordinating the poll questions and the event evaluation. To ensure our time here is meaningful today, we will establish some housekeeping to guide us. We have the question and answer session on this Zoom app for your questions. Send your questions and we'll do well to answer them accordingly. The chat room is enabled for your comments and suggestions. This forum is a learning and knowledge sharing forum, so we expect full participation, and we also encourage active listening. We are currently live streaming this discussion on our social media handles, Facebook and YouTube, and the session is being recorded, as you can refer to it for this webinar and previous webinars we have had. Before we go ahead, we'll be launching a poll to get your feedback on your understanding of the topic. Please do well to give us your views. We just give you to do that. My colleagues are coordinating the poll questions.
Okay, thank you, Jacob. Our poll today has been designed to give feedback on your understanding of the topic. Please do well to give us your views. We just need 5 minutes of your time. You'll be able to see the poll on your screens. Kindly select that which applies to you. Okay, the answers are trickling in corresponding to the poll. We have barely 4 minutes more to end this poll. Okay, We have quite a number of agribusinesses here present, and also a significant number of non-agribusinesses here. All right, and a larger percentage of our participants are executives in their organizations. Okay. All right, and we have a large number of our participants engaged in livestock farming. And we also have participants also engaged in field crops farming, and also participants engaged in non-agri businesses. Okay, feedback that we have received so far shows that we have a mix of participants here, participants from the agri sector and also participants from the non-agri sector, and that's really impressive. We have barely 3 minutes to go. Okay, feedback received so far shows that our participants, a larger percentage of our participants would rate their cash inflow as being average. And we also have a significant number rating their cash inflow as being below average. That's for the agribusiness participants. And sadly, we do not have any rating their cash flow above average. And this calls for a whole lot of intervention. Okay. All right, we have about 15% of the feedback we've received so far shows that participants would rate their cash outflow above average. This contrasts with what we had for the results we had for cash inflow. So while there's been very little rating of cash inflow above average, we have quite a significant number of participants rating their cash outflow above average. That actually shows that profits of such businesses have deeply been affected in the last 6 months. We have barely 10 minutes to conclude this poll. Okay, we've concluded the poll. We just concluded the poll, and I'll just share the results right now so you can view them on your screen. So the feedback that we have from our poll shows that we have a mix, agribusinesses and non-agribusinesses, and it's actually 54-54. So it's a very significant number of persons. And we have a larger percentage, 68% of our participants occupying executive positions in their organizations. Okay, and we also have agricultural business owners engaged in field crops farming and also livestock farming. And we have a significant number of them who engage in services, providing services in that industry, the agriculture industry. Okay, and feedback also shows that we have a larger percentage of participants engaged in production, which is farming. Okay, we hope that from the feedback that we have received from the poll just concluded, we hope that by the end of this webinar, we would have better positive results from our evaluation. So thank you so much for your time. We'll have to go back to Jacob to continue with the webinar. Thank you.
Thank you so much, Adobe. A very interesting and impressive feedback, I must say. Okay. Today we'll be discussing a very important topic, exploring opportunities in the agri value chain. Our key discussant for today is Olabode Abikoye. Olabode Abikoye is the Chief Executive Officer of Agric Capital Limited, and currently is a champion for agribusiness for Olabode Abikoye is the Chief Executive Officer of Agric Capital Limited, and currently the champion for the Agriculture and Food Security Policy Commission at the Nigerian Economic Summit Group. Olabode Abikoye has 27 years work experience leading in the establishment of strategic business units across various financial institutions in Nigeria, with focus in pioneering roles in agribusiness, public equity, and asset management. He led the agribusiness team in when he was appointed to the board of Ose Banking. Okay. Mr. Bode, agriculture is central to economic activities in the country, as it was the mainstay of Nigeria's economy before the discovery of crude oil. The GDP in Nigeria was worth $448.10 billion in 2019. According to official data from the World Bank and projections from Trading Economics, the GDP value of Nigeria represents about economy. From the Nigerian Bureau of Statistics, agriculture contributed 20.88% to nominal GDP in the first quarter of 2020. In real terms, Nigeria's GDP for the first quarter of 2020 stood at 16.7 trillion naira, meaning agriculture generated about 3.7 trillion naira, and it has the capacity to contribute more. Developing the agriculture sector requires long-term and affordable financing across the value chain segments. Over the years, the government has facilitated several interventions. Sustainability of the intervention schemes has been major constraints to expanding credit growth available to the agri sector. So what are the opportunities in the agricultural value chain? These are more questions will be addressed in this discussion. So let's get started. Mr. Bode, let me start by what is agricultural value chain and what makes up this value chain?
Okay. Good afternoon, participants. The agricultural value chain actually starts from the point of preparing the land for clearing up to the markets. So when you are looking at agriculture, mostly you are looking from two perspectives. You're either looking at crop products or livestock products. In the case of crop products, which is what most people in the agriculture space in Nigeria are involved with, the value chain starts from the actual act of preparing the land for the crop it is to receive. In preparing the land, we require to be able to clear the land. And after we have cleared the land, you prepare it for cultivation. So there is land clearing and there is land preparation, which is the beginning of the value chain. Subsequent to that, you are going to need to look at what inputs needs to go into whatever value chain you are looking at working on. So in the case of crop products, you are going to have seeds and agrochemicals and fertilizer as will be appropriate for that crop commodity. Traditionally in Nigeria for a very long time, we have been fed with the notion that NPK 15-15-15 is what is required for planting, which basically means you have nitrogen in 15 portions, you have potassium in 15 portions, and you have phosphates in 15 portions. But based on studies that have been championed mostly by the Federal Ministry of Agriculture, we have found out that the requirement for soil augmentation, as well as the crop specificity for requiring various micronutrients varies. So if we take maize, for example, we see that what we need is not the 15-15-15 variety of fertilizer, but more a 20-10-10, which means you have nitrogen as 20 portions, you have phosphate as 10 portions, and potassium as 10 portions. Beyond fertilizer, then there's going to be the need for improved seed varieties. There is a difference between grains and seeds. So in a lot of cases, you find out that people take what they have planted from the last season and they just plant it in the new season. They take out of whatever they have harvested to plant in new season. But those are not seeds. Those are grains that are meant to be consumed. There are folks, particularly the Seed Council of Nigeria, who work consistently on improved varieties of seeds that can be planted. So there is also seeds, then there is agrochemicals. There are companies that produce locally and also import agrochemicals for specific crops. Then beyond providing the inputs, there is the actual act of cultivating the land, for which you are going to need mechanization equipment. And then after you have planted, there is the need for gestation for the crops to grow and be ready for harvest. And then you are going to need to begin to prepare for post-harvest cultivation practice, post-harvest management practices, which will include the harvest and the handling of the commodities in such a way that they meet the expectations of the market in terms of what the market expects to have in form of form and quality. So basically, that's the standardization process to meet what standards the market requires. Then after we have harvested, you have two pathways. You can either have storage, or you can have direct usage of the commodities. The pathways you adopt is going to depend on who the end user is going to be and what they require it for. So if you are looking at a retail market that is looking to consume what you produce directly, then the best you may have will be a period of intermediate processing before it gets to that market. Or if you have a market of industrial users who are looking to use your own output as input for their own production, then you have some form of storage to enable them to meet the inventory storage requirements of their own things. So there are standards for both. And aside, so in that space, you can either have direct storage, or you can have some form of intermediate processing before it gets to the market. Then after you have gone through that stage, there's going to be a need for you to begin to look at what form of processing that commodity lends itself to and what the market is supposed to be. So there could be processing at that end, or you might have stopped at intermediate processing. Then after that, you will need to get to the market itself. So who is your target market? What is their expectation of the commodity you are offering for sale? How do they want it packaged, for example? What are the quality specifications that they expect to see? Do they have minimum requirements for moisture content? Do they have sensitivities to the level of mold that is in what you are providing to them, and a number of other things? So in brief, that is the value chain of agriculture right from inception to the markets.
Okay, thank you, Bode, for that insight. Okay, what are the opportunities in the agriculture value chain, especially at this time of uncertainty?
Okay, thank you for this slide. I think this slide explains what the challenges are, and wherever you have challenges, you will always have opportunities. Since folks can read the slide, can see the slide, I will not go through the reading of it. I'll just take each of the steps and try to provide an explanation. In the case of land clearing and land development, the opportunity is for the provision of mechanization equipment that is going to help us to be able to efficiently clear agricultural land and prepare it for usage by farmers. So whoever is able to provide those two services, it is going to be a point of opportunity. There are certain challenges, and if you look at the challenges, it enables you to look at what opportunities you can provide. But there are certain things that I like to speak to that begins to tell people that the fact that we have said there is opportunity in agricultural land development, it doesn't mean that it's a bed of roses and you are just going to go there and begin to rake in the money. There are certain things you need to take into consideration in being able to take advantage of the opportunities that are there. So the need for land clearing equipment particularly is very capital intensive, and saying you want to go into land clearing is going to be something you should think about properly and understand that you have the finances to be able to accommodate the requirements in there. Also lumped with land, agricultural land development is the issue of the cultivation of the land, in which case you are going to require tractors. Now, a lot of solutions and a lot of effort has gone into providing mechanization for agriculture in Nigeria since 1956, when we started bringing in tractors. The key challenge that we have had is that folks have brought in large capacity tractors for us as a nation, tractors of between 65 and 75 horsepower and above for use in agriculture. And this is not necessarily wrong. If you have the land size to be able to allow you to effectively deploy such equipment. But the issue in Nigeria is that about 70% of the folks involved in agriculture in Nigeria, well, not 70%, 70% is the figure for folks who are involved in agriculture itself. When you look at us as an economy, about 90% of people who are involved in agriculture in Nigeria, they are smallholder farmers. Their land holdings are typically between 0.8 and 1.5 hectares. Now, if you provide a 60 to 75 horsepower tractor to such an individual, it doesn't have the land size that enables him to efficiently amortize that cost over a period. Before the foreign exchange spike of 2008, a 75 horsepower tractor, and I wouldn't want to mention any manufacturer's name, but typically the cost of it was about 6.8 million naira per tractor. Following the spike in 2008, there was an increase to about 14.4 million, and that was with government subsidy in it. Now, post-COVID, we have experienced another spike. We have experienced another depreciation in the current price in the parity of the Naira to convertible currencies at the moment. So I see that figure increasing significantly. The last number I have for that, which I have not tested against the market, is 15.5 million. Now, there's no way you are going to be able to amortize that cost against the size of the land that folks have to cultivate these days. So issue then becomes, are we offering the right kind of mechanization equipment for the smallholder farmer who forms the bulk of the farming population in Nigeria? My own theoretical answer is no. There have been solutions like equipment leasing facilities that have been offered to smallholder farmers. So if you can't own the equipment, you can go to somebody who has the capacity to lease the equipment to you and you'll use it. But I have a challenge with that. When I was talking to Jacob a couple of days ago, I told him that I was raised by a Yoruba farmer, by a Yoruba teacher. So I have a tendency to revert to the Yoruba language, but I will translate. She also taught me how to translate. There's something the Yorubas call Iwofa Joya. In the olden days, when you owed a debt and you could not afford to pay that debt, you had the option of giving them your child to serve till the debt is satisfied. But in a lot of cases, if you are poor enough to owe one person, you are likely to owe 2 or 3. So you give that child to serve 2 or 3 people. And while that child is serving, nobody is particularly interested in the welfare of that child. So they don't remember that the child's hair has not been barbered. So the head of the Iwofa Joya is usually very bushy, which is why the Yorubas will say, Ori Ekunbi Iwofa Joya. It means his head is as bushy as the head of a child serving debt for more than one person. These tractor and equipment leasing companies, in most cases, the owners of it are interested in maximizing profit. So the issue around maintenance of equipment is not what is topmost on their minds. They want to make as much money to be able to amortize the cost they have incurred. So they'll move it from one location to another. And maintenance in that case suffers. But what if we had the kind of situation they have in India, where every farmer drives his own tractor like we own motor cars here? So what we will need to be able to do that is not to be able to give them, to be able to give them large capacity tractors, but tractors that are suited to the size of their land holding. And these tractors exist. I have seen a couple of them in some of my searches globally, and I've actually tested 1 or 2 of them. So I think anybody who is also able to look at that space and say, how can I provide mechanization equipment that is tailored to the need and the reality of the Nigerian farmer, will see an opportunity. Then there is the issue around inputs. We have spoken about inputs a lot in Nigeria, but in most cases, when we are talking about inputs, we are mostly talking about fertilizer application, and fertilizer alone does not do it. We cannot continue to plant grains as seeds and expect to get improved productivity from our farming activities. So we need to begin to also look at taking on the opportunity of distributing actual seeds to farmers for them to be able to look at. It's not just seeds, it's in fertilizer. So it's about crop specificity and soil specificity. It is not rocket science. The Federal Ministry of Agriculture has a soil map of Nigeria that shows you the spatial distribution of crops in Nigeria, the kind of soil that is best for them, and the kind of augmentation that you also need to do to those soils. Aside from soil specificity, there's also crop specificity. So in what proportion does the specific crop you want to plant, in what proportion does it exist? There is the Presidential Fertilizer Initiative that is available in Nigeria today that is responsible for producing fertilizer using blenders across the country. I think there are 14 now or more of them, who are meant to also be blending along the lines of those soil and crop specificities. So distributing agrochemicals and fertilizers specific to the requirements of geographies as well as crops presents an opportunity. Then we must start looking at scale while we're at the cultivation level of primary production. We must start identifying with the fact that our farmers are small in terms of their land holding. They will not provide any reasonable assurance to any bulk user of agricultural produce of them being a group that can be used in planning what their own production plan should be. So if I was to use an example, a large miller of feed, and I need maize, and you tell me you have 50 bags of maize, I cannot plan based on that. So people should also start looking at a situation where we begin to collectivize these farmers and begin to provide them with the kind of enablement, teach them the better agricultural practices. They are called globally acceptable agricultural practices that will allow them to get the kind of mileage that they need from their crops in terms of productivity. Then in this diagram, we have storage as the next level, and it is the next level. But it will actually be that at that point you diverge into some form of processing too. If you are dealing with a perishable, for example, that does not lend itself readily to processing. So what value can you add at that level that allows you to preserve the value that you have in your crop before it gets to the market? But if you are not dealing with the perishable, then you have capacity after you have done some form of intermediate processing. So if, for example, you are a maize farmer, you will not sell the maize on the cob. So there will be need for it to be dried. And when it has been dried, you are going to need to now shell it. And after you have shelled it, you need to bag and store properly. But I will want to draw attention to something that is critical, particularly when it comes to livestock products, as well as perishable agricultural products. Nigeria has cold storage capacity today of about 10,000 cubic meters. Now that 10,000 cubic meters is storage that has been built over time. So you cannot even vouch for the fact that they are in the topmost condition to handle the kind of productivity that we require being a nation of 200 million people. So there is the need for us to begin to pay attention to not only dry storage, but the development of cold storage capacity. Now, there are studies that have been conducted. I'm aware of one that the government of the Netherlands sponsored. I'm also aware of the USAID study on the Lakaji corridor. Lakaji means Lagos, Kano, and Jibia, which traces a commercial route for agricultural produce from Lagos to Jibia on the border with the Niger Republic. Now, along that route, there is an opportunity to be able to locate cold storage facility in nodes where it will serve the requirements of farmers. So that is an area of opportunity. The other thing to also pay attention to, as in the case of mechanization and the scale of the tractors we use, is in terms of the appropriateness of the storage facilities that we have now. I think, and it is a question that is open to argument, because as a government, as a people, even as private investors, we have invested substantially in the development of silos. But I think that silos might not be the most appropriate storage facility in a developing economy because of the challenges we have with issues around power, because of the challenges we have with issues around the mechanical operation of the, what's it called, maintenance and stuff like that. So my own advocacy will be for a chain of warehouses tied to the commodities exchanges so that they become viable. So somebody should be thinking of how do we develop a chain of warehouses as well as appropriate assaying services that's going to be able to check and validate the quality of agricultural produce before it gets to the end users. Then we get to this. We have a number of large-scale manufacturers. There is also, I say that those folks pay attention to the high-value end of what's it called, but there is also the medium-value end where an SME can play a role. So who is the person that is producing gari? Who is the person that is producing yam flour? Who is the person that is producing cassava flour, which the Egbas call lafun? Who is the person that is producing plantain flour? These things are processing facilities that can be set up in geographies where those crops have comparative advantage. And we can then begin to extract value and add value for our farmers before it gets to the market. Then we get to, but presently we have large manufacturers of FMCGs who are accessing commodities from various farmer groups for processing to meet their own input requirements. Then we go to the markets. Now, in the markets, we have a number of markets. We have the FMCG markets, which preserves a bit because they have added value to it. Then we have the retail food markets, basically. So who are we targeting and how are we targeting them? A lot of these things folks do off the cuff without really planning it. But if you sit down and you articulate your own market engagement strategy, then there's a huge market. I'll give an example. The cooperative movement in Nigeria today is 60 million members strong. Those 60 million members, 36 million of them are active cooperators. Now, let's even say that the 60 million members can be converted. That is easily 30% of the Nigerian population today. So imagine a situation where somebody sits down and articulates a plan by which you engage the cooperative movement and begin to use them as a channel. So it's not just like there's an available market. I said something to Jacob in our last conversation, and I asked him specifically not to put me in trouble. It was an example I cited, but I guess I have become a bit bolder since then. We have a venerated former president of the Federal Republic who once told cassava farmers that there is a huge market for cassava in China. And the gentleman was correct because he knows what he's talking about. He understands agriculture. But while he could envision and he expected folks to drive the vision, what folks didn't tell him is that nobody had gone to prepare the market for the cassava farmers to be able to access. So nobody, while we all know that China requires starch in the cheapest form they can find, and if cassava it is it, so be it. Nobody told the farmer in what form or in what quality, the specific quality that most buyers will call quality specifications, that the Chinese required cassava from. So the farmers, because this respected gentleman said it, went and put cassava cuttings in the soil, and the cassava cuttings did well. They turned into cassava and all that. But what nobody did for those farmers at that time is backtracking to our previous step, processing. Nobody informed those farmers that 40% of a tuber of cassava is water. The next 24% is starch, and the rest is fiber. Now, if you don't extract that starch, which is the most useful ingredient in that equation, if you don't extract it within 48 to 72 hours, that starch progressively degenerates to about 12%. So So you have lost 50% of your useful ingredients. But nobody told the farmer that or prepared a processing strategy where that starch could be extracted, where it could be extracted wholesale and then be able to trade it on a market that somebody had already sought to find out what the specification they want is and all that and all that. So nobody spoke to the market. And because everything begins and ends in the market, you must know what the market wants and be able to prepare for the market. So it's not just about the fact that we are the largest retail market in Africa. What exactly does that want? So when you look across the value chain and you look at these various possibilities, those are the opportunities in the agricultural value chain in Nigeria today. You need to unmute. You need to unmute.
Okay.
Hello?
Can you hear me now?
Yes, I can hear you.
Yes, sir. Okay. From the last information I got passed on, I just have a question. In your opinion, has the agriculture sector been primed to be efficient enough to take advantage of the opportunities that exist in that space in a cost-effective manner?
Jacob, we had a deal that you are not going to get me into trouble. The people who are defining policy, who are driving strategy, they're my bosses. You now want me to start answering this question. Well, frankly speaking, as a vested Nigerian, I don't think we have done enough to be able to allow not just Nigeria, but individuals in the agricultural space to take specific advantage of opportunities that are present. Not because we don't mean well for the nation, but because folks have not gotten down to understanding what the requirement is so that we can put the right kind of funding behind what we require. So in my own opinion, I think we've created a lot of intervention funds. And in nominal terms, when you look at it, we have done a lot. But I think we have gotten to the point where we should begin to rationalize and approach how we fund agriculture in a much more pragmatic manner. For example, what commodities are important to us? And when we understand those commodities that are important to us, how do we begin to mine the value for the practitioners in the industry, as well as for the nation that is spending so much importing agricultural commodities into the country annually? You see, that mindset becomes critical because post-COVID, the game globally has changed. It is not that it is changing, it has changed. Our earnings from foreign exchange is not what it used to be in the past anymore. Globally, everybody is looking for alternatives to oil. In electricity, they are looking at it in renewables, they are looking at it in non-fossil fuels. The Americans are big in shale oil right now. So what exactly are the crops that are critical to us? We import, and I don't know if my figure is correct, we import about $3 billion worth of food commodities into the country annually. Now, each time we import those food commodities, what we are doing is we are exporting the jobs and the opportunities that are available to the Nigerian economy, as well as to the Nigerian youth. And it is instructive that the kind of social agitations we're we've been having in the past week or so in Nigeria is happening at this time. One of the reasons that is happening is because these young people, they are frustrated. They can't see a future. The capacity that we have to create that future for them, we are giving it to somebody else. You see, when I ran agribusiness in Union Bank, and I'm not sure I'm a very old man for me to refer to some people as young people, but I worked with a group of younger people, intelligent ones who knew more book than I know. And they came up with what I call the theory of the inefficiency gap. You see, what we deduce from that theory is that one of the reasons that agricultural commodities in Nigeria cannot be price competitive is because there are a lot of inefficiencies across the value chain. That inefficiency is in the Land Use Act that says all land is vested in the subnational. So you need to convince the state, or you need to convince some family that is holding onto land that they are not using, that they should put it on the table for agricultural commodity or for agricultural use. That inefficiency is in land clearing, in the appropriateness of available equipment not to destroy the topsoil when they are clearing land. It is in mechanization. It is in folks being able to access mechanization that is suited to their own purpose for the function of land cultivation. It is in available agricultural input. Like we said, it is in planting seeds and not planting grains. It is in post-harvest loss management so that you have appropriate storage for, what's it called? It is in efficient markets where price discovery for the farmer is transparent and is fair based on the value that they bring to the table. Now, when you look at the continuum of all of this and you monetize it, there is no way that a ton of maize coming from Brazil and a ton of maize coming from Nigeria would be the same price. We will factor all of these inefficiencies. But you see, each time we import a ton of maize from Brazil, we are paying for the infrastructure that they have paid for over donkey years. They continue to amortize it to us with each ton of commodity that we import, that we import from them. So what should we do? And folks might say it is semantics, but like I said, I was the leader of the team. I'm not a very intelligent person. They have to listen to me when I talk it. So I said to them that what we are doing is that instead of funding inefficiency out of our system, we continue to finance that inefficiency in the form of every ton of agricultural produce that we bring into the country. And to my simple mind, that makes a lot of sense. That person has paid for it, but he needs to recover that cost. So that cost is factored into every kilogram that I buy from him, into every ton, and it continues to. So my own proposition is this: instead of the intervention funding that we keep throwing, and credit is not the only challenge to agriculture. In fact, one of the successful businessmen in this country today and globally will tell you that the easiest thing to find is money. If you can demonstrate to the provider of funds that he's going to get his money back and with some measure of return, then finding that money is not going to be a difficult issue. So I don't think, but we continue to throw intervention funding behind this thing. And in throwing intervention funding behind it, what we are not doing is, are we paying attention to the fact that it might not be what we should be funding that we are funding? So everybody applies for what they call an Agric loan. I don't know what an Agric loan is, but they apply for what they call an Agric loan. We give them a loan at sub 10, and they take the loan because they have said they want to, for example, put it in poultry. But what should we be funding in poultry? A world-class, what's it called, came into this country. A world-class fast food company came into this country, looking to open 350 stores. When they found when they got to 70 stores, they started rolling back. Why were they rolling back? They could not find the maize and the soya with which to grow the chicken that will go into their restaurants. So if we have identified, but at the same time, somebody is smuggling chicken in from Benin Republic through our porous borders. So if I give somebody money to do poultry, what exactly am I funding in that? Am I funding eggs? Am I funding broilers? Have I done a comparative to see where exactly my money should be going if I know how much poultry is being smuggled into this country on a daily basis? The folks that I mentioned to you also have minimum standards for their processing. Between Oyo and Ogun State, they produce 60% of the poultry in this country. Should somebody not be thinking of how do I develop a poultry processing park in either Oyo, preferably in Ogun State? Because when you go to northern Oyo State, Abi, you have the same kind of climatology, you have the same kind of ecology that you have in northwest Nigeria that supports the growth of cereals and oilseeds, mainly maize and soya beans that would ordinarily go to feed chicken. So why can't I set up something in Oyo State to expand primary production in those, probably put milling facility capacity behind it, then take that mill to Ogun State. And because they have demonstrated that they have the competence to grow chicken, give it to farmers in there to grow chicken and have a poultry processing park in Ogun State that processes poultry. So we could cite those examples. I can cite the same example for oil palm in the South. I can cite the same example for roots and tubers in the North Central. But what exactly are we funding? There doesn't seem to be any pattern that says this is what our strategic goal is, and these are the objectives we have set for ourselves to conquer so as to get to that goal. So if I was to answer your question, yes, we are doing a lot. It's in the papers. The intervention funds are in the public space for everybody to talk about. But are we in the real sense funding what we should be funding? We understand what our commodities of strategic national importance are and how we begin to finance inefficiency out of that so we become more price competitive.
Okay. Okay, if you're just joining us, we've been discussing exploring.
You're muted.
Okay. Is very experienced in the Agric sector. You may share your questions using the Q&A session. And if you are on Facebook, please share your questions in the comment box right now. We have two questions from our participants. Someone is asking if you're able to share your slides on the opportunities in the agri value chain.
There is it depends on what slides. I've done a couple of work over the years, and there are probably a number of things that speak to different things I can share. But for the purpose of this conversation, since we could talk through it, the only slide I have available is the one that you have put up now. But if folks let wider perspectives know what the specific areas they want addressed are, then I can most likely put something together and pass it through wider perspectives to the folks that are interested. Yes.
Okay, that'll be fine. That'll be fine. Okay. The second question is, what advice can you give for a business that is in the process of starting up? What advice can you give?
Well, that's a tough one. One, because I don't believe in advising people. Two, because I also feel that if you approach the market with the concept that you have an advice under your belt that you're going to work with, you are most likely going to lose money. So my greatest advice is don't be afraid to make mistakes. Make sure you don't die in the course of it, because like the Yorubas will say, entokuniti etan. Entokuniti etan means that it is the person that dies that his own has finished, in very plain language. If you don't mind making mistakes, costly ones too, and you learn from them, then when you need to do it all over again, don't do it. But you will not make the same mistakes. But you see, making that mistake also presumes that you have armed yourself with the best of information about what you want to do. So I'm also not asking you to dream without bounds. I'm saying your bounds should be based on the facts available to you as to what exactly you're about to get into. I will cite a personal example. I started trading cocoa, international exports, when I was age 25. And at that time, the financial industry had just crashed. This was a while ago, well over 25 years ago. And at that time, I was working in non-bank finance. The non-bank finance segment of the financial market had crashed, and folks were looking for what to do. And folks were exporting cocoa, and it was something to do. I went into it, and not only did I lose my shirts, I lost a lot of other people's shirts. But you know what? I went back and did it again, armed with the knowledge of the mistakes I made in that first attempt. And this time, it is better. It succeeds better, because the information I didn't have at the time, I now have it. The understanding of the market dynamics I didn't have, I now have it. So I would say perhaps the greatest advice you will have is leave your sense of fear. Leave it at home if you are starting up and you want to what's it called, but wear your risk management cap so that you can look for all the possible pitholes and be able to guide against them. But aside from that, I cannot reasonably offer anybody any advice. I've failed too many times for me to qualify to offer people advice on how to succeed. The only advice I can offer you is if you are really, really interested in it, keep pushing it. At some point in time, it gives. Just go there and do it.
Okay, before we go ahead, there is another question from the participants that you did not touch on the livestock industry as you have analyzed the crop production.
You see, livestock, and I mentioned at the beginning that the bulk of folks involved in agriculture in Nigeria, they are in crop value chains. The larger proportion of the GDP that is generated from the agriculture sector is also generated by the crop value chain. So that is an excuse, but not a good enough one. But you see, the livestock value chain, which is why it is one word, all encompassing. It includes heliculture, it includes dairy farming, it includes small ruminants, it includes large ruminants, it includes poultry, it includes fishery, it includes apiculture, and a number of things. So it is not as easy to narrow down a step-by-step in the animal value chain, because the requirements for each of those areas I've mentioned are different. It is not, for example, the same way that you are going to handle a poultry business, that if you are growing broilers, has a gestation of between 6 and 8 weeks, depending on what live weight you are looking to achieve. It is not the same strategy that you will deploy. But if I'm talking about crops, I can use very broad terminology because you will prepare land. When you are prepared land, you will cultivate it. When you have cultivated it, you will use good input. When you have used good inputs, you will manage post-harvest losses. It's easier that way. So except the gentleman, I think that's Theophilus Adeleke, except the gentleman is asking about a specific livestock value chain, then it might not be as easy to granulate as I have granulated the crop value chain.
Okay. Okay, thank you. We'll be taking more questions from our participants as we go ahead. The Executive Director of the Nigerian Food Products Research Institute, NISPRI, Mr. Olufemi Peters, says Nigeria records 2.7 trillion deficits annually from post-harvest losses. What are the best preventive measures to encourage investment in the Agric sector?
Well, like I said, my own and the Jacob, we had a deal now. Why are you doing this? Why did you quote Oga first before you now said I should provide my own opinion? See, my thought is this. I think, like a lot of things, and this is a personal opinion, it is subject to debate. I think even in storage, we're offering what I consider to be the wrong solution given the level of our development as a nation. I think at this point in time, if we want to keep strategic reserves, we can keep strategic reserves in silos. But if we want to manage post-harvest losses for agricultural commodities, particularly the staples, that is everyday food for everybody, I think the strategy for silos is wrong. But when you look at it, when you look at storage capacity, there are a couple of corporates that own their own storage. But those corporates, they mostly have those storage in proximity to their own manufacturing facilities. It is for their convenience. But as a nation, we do not have a storage network that begins to address the immediate need of the farmer for access to store produce. Because they don't have that access to store produce, they succumb to the middleman at the period of harvest. So they cannot take any long-term advantage of upsides in price movements, particularly in the off-season. And those off-seasons will continue to happen. That is one of the inefficiencies I tell you is in the value chain. We can only farm in Nigeria when the rains are here. We're entirely rain dependent, except for some commercial concerns that own their own irrigation. If that continues, we are going to continue to see trends of peaks and troughs in the pricing of agricultural commodities. Now, if, for example, somebody working again with the commodities exchanges, and I've had some interesting conversation with the new entrants into that space, the Lagos Commodities and Futures Exchange. If somebody is taking the pains of seeing it as an investment, to put in place a national warehouse chain that has standard assaying facilities. So people are not just dumping any commodity that they want into the warehousing system. If we have that, we have done two things effectively. We have helped the farmer to be able to curb post-harvest losses. We have also helped him with the possibility of price discovery, because this warehouse receipting system that we have been making a lot of noise about in the financial space particularly, and that we have not gotten done, then becomes a reality. But that storage facility has to be there and in close proximity to the farmer, so that the folks who are large users of commodities can then know that in terms of quantity, and because we are putting assaying facilities in place, in terms of quality, they can depend on that system. So when you look at it, I think the next level of investment is for us to be able to help the farmer curb these post-harvest losses, give him storage capacity where he can also take advantage of the seasonality and the price movements that the middleman is taking advantage of him for already anyway. Then when it comes to, just so that Theophilus doesn't take me up again, when it comes to livestock products and perishables, I mentioned earlier on that the USAID did a study on the Lakaji corridor. Lakaji is from Lagos to Jibia. It is a commercial route. So fish and stuff that we are still importing and that we can produce too is coming in from the south and is finding its way up north. Meanwhile, we also have perishables like tomato and other forms of horticulture that are being grown around the Rima Basin and a lot of other irrigation projects that are looking to find their ways to the south. But that would, in most cases, have experienced some spoilage, such that they will be underpriced by the typical Nigerian woman who goes to the market and doesn't tell you that she's still going to grind the tomato and eat it anyway, but she's going to tell you that because it's not looking spanky, that she's going to pay a lower price. So who is looking at that corridor of opportunity? But in terms of cold and dry storage, we have deficiency, both in the appropriateness of the kind of storage we have in place and in the capacity. Like I said to you, we have just about 10,000 cubic meters of cold storage, which is depreciating on a daily basis because nobody's maintaining it. Nobody's maintaining it because folks see it as a complement to their existing business. They don't see it as a business that they can also outsource to farmers who don't want to lose their produce and be able to make money out of it. So nobody is adding to that capacity. Botswana has 40,000 cubic meters. I'm sure Botswana is not the size of Oyo State. So somebody should also begin to look at our storage capacity per capita and begin to look at that as an investment opportunity, because the farmers who are losing their commodities, who don't want to lose those commodities because that's their livelihood, will pay for that service. Because if that farmer sees that his livelihood improves today, he will consistently pay for that service. So there's a market in there. So necessarily on the cold and the dry storage, that is what I think should be the strategy. We should begin to look at developing a network of warehouses for our dry produce, and we should also be looking at the possibility of adding significant capacity to our cold storage, our existing cold storage capacity.
Okay, buddy. I think we really need to invest in storage infrastructure to reduce food losses and increase food safety. Okay. High cost of processing equipment is a major challenge affecting processors. How can this sector be assisted to overcome these challenges?
The way the sector can be assisted to overcome the challenges is two. And both of them are pretty straightforward. I'm sure the industry players have no challenge with them. The commercial banks want to see reasonable returns following whatever they put their balance sheet behind. They also want the assurance of the security of what they put in. Our development finance funders also need to begin to be more strategic in how they deploy development finance. This is one of the things we spoke about earlier on, about what exactly are we funding and what should we be funding. It is not difficult for us to establish the deficit of processing capacity in any value chain that we choose to focus on. We can begin to look at those deficiencies and say, how much do we need to fund it? Now, it doesn't mean we are going to need to carry all of that at once. We can decide on a 5-year horizon, just to use a figure, for example. Now, where will the money come from? Where is the money that is going into all the intervention that we are doing now that are not targeted? Where is it coming from? 2, when you import a ton of any agricultural commodity into this country today, we pay a surcharge. That surcharge can be deployed to improving specific value chains. So there's a sugar development fund. I don't have the information off the top of my head, but I would imagine if we have imported rice for such a long time, there is a rice development fund. There are funds all over for different things. Where are those monies? If we pick specific crop value chains and we say this is what we want, I don't know about textile because I know we are doing a textile fund now, but if we say this is what we want, we can take out of those surcharges, even if we are now going to need to supplement it from government coffers to enable us to meet it. But what exactly are we funding in terms of processing capacity? We can establish the deficits. We can also look beyond the usual culprits of corporates that get access to this intervention fund. Because until we begin to spread that prosperity down the ladder, efficiency will not be there. We are going to have the agricultural commodity continue to feed these large conglomerates, and they will not be getting the value. So what value addition can they add before they pass on to these gargantuans in terms of what's it called? So do we need to expand the number of gineries in cotton that we have? What is the minimum capacity that we can use for the processing of raw sugar, and where exactly is that happening? There are 10 states in northern Nigeria that can produce wheat that is suitable for use in confectionaries. We did this study, myself and those brilliant people that I mentioned to you in Union Bank. We did the study. And please excuse me if I seem to be repeating Union Bank. It was the best agri-finance bank while we ran the team. I'm not there now, I can't say, but we must give them that kudos. They've supported it for a long time. Now, there are 10 states, there's a variety of wheat called Attila, which is grown well in northern Nigeria. It mimics it matches, not mimics, it matches the winter red that is imported from Europe, I think specifically Russia, that is going into wheat production in Nigeria. Now, why don't we have irrigation behind those farmers for them to be able to, that is infrastructure, for them to be able to grow year round, so that the large producers of maize, of flour, can begin to see them as a dependable source for the wheat that goes in. Don't give us everything, start with 5%. Get the statistics from Union, from the CBN of how much wheat we import into this country. Put 5% of that in the hands of our farmers and say, use that one to trust us. But look at what they need to be able to produce the Attila variety of wheat year round. So put irrigation behind them, put appropriate mechanization behind them, put post-harvest loss management infrastructure behind them, put all of those things, but fund in a targeted, specific way. And it cannot be us drawing up a product program and saying, this is it. Once you have this, bring it. Folks will meet it. They will meet the requirement of those product programs. But instead, let us say, this is what we want to fund in rice. This is what we want to fund in wheat. Based on the fact that we have sufficient information for us to understand that that is where our problem is in that value chain. Then put capital behind it. So like I said earlier on, yes, we have money, we have thrown money behind it. But are we funding the right thing? It is the same thing with infrastructure. You need to understand what infrastructure you need to fund for specific value chains for you to have efficiency in the deployment of your capital.
Because of time, we are going to take just 2 questions from the participants. One of the participants is asking, what's your opinion on greenhouse farming, especially in the southern part of the country?
I have heard of a greenhouse farm is basically a controlled environment where you look at what the climatology and the hydrology and the crop augmentation is, requirements are, and putting it in place so that the crop can perform the best under that control system. But in a personal experience, I once had with a friend of mine, a greenhouse farm of about 10, I think it's the 8 by 24 or so greenhouses in Osun State. My sense is that the material with which, even if you are able to control all of the other conditions, the material with which you build it, you need to be sure that it is suitable and appropriate for our own climate. A lot of these greenhouses, we bring them in. I've been to the Netherlands where I've seen them use glass to build their own greenhouses. It made sense because of their climate. I've been to Kenya and I've seen some. It makes sense. But in a lot of cases, folks don't even understand the material that goes into making their greenhouses and how that can potentially impact on the performance of their crops. So I would say growing in a controlled environment makes a lot of sense, but also using the appropriate greenhouse. So I think one of the first places to start from is is to research the material that is going into the greenhouse that you have bought and be sure that it is something that complements the climate of it. Now, when you are talking about southern Nigeria, there's also a need to make sure you have a detailed soil study. So one of the challenges we had with the farm that I mentioned to you was nematode infestation. We didn't do a soil study before we started, but when we noticed we started having problems, we took the soil sample and we took it to the what's it called? I don't mind mentioning the name of the university, it's the Obafemi Awolowo University, and they did a fantastic job. There's also IITA, there's also UI. Of course, there's also the most fantastic university in Nigeria, University of Ilorin. That's where I studied, by the way. You can also go. If you want to study agriculture, go to Ilorin. You can also, yes, but it's too late for you, Jacob. You can also, You can,
It's not late.
you can check the profile of the soil and be sure of what you are dealing with. But aside from that, I think a controlled environment, if you can afford the cost of it, should theoretically give you good productivity because you are providing to the crop all that it needs to be able to perform most ultimately. But check your soil, check the material of your greenhouses, and also check your what's it called, your agricultural practices. Yeah.
Okay. Okay. Another question from the participants. One of the participants said, I've just watched a fascinating video on shrimp farming in Ghana. The prices are good. Do we have any such projects in Nigeria today?
Not that I'm aware of, but what the person who asked the question also did not talk about is what was the cost of producing shrimps. You see, I usually like us to separate romance from reality. I've seen videos of some banana plantation in Ghana. I've heard about this shrimp farm you're talking about, but how was it funded? And is it a realistic proposition for an SME to look at? If you cannot achieve scale, can you still get the same results as that farm that you are referring to? Can you still get the same results farming shrimp? So I have heard about this farm you're talking about. I have not personally had any dealings or any engagement with them. But when we are looking at successes, we should also look at the root of that success. How was the project planned? What are the factors that made Ghana and shrimp what that investor wanted to do? What is the financial cost of putting such an enterprise in place? So that we don't have our heads in the clouds and we start dreaming of something that when you situate it within the reality of your own circumstance, might not be a proposition you should be pursuing. So I've had a lot of good things about some farming initiatives coming out of Ghana. I'm happy for them. I've had dealings with the Ghanaian, with the establishments in Ghana, including the CBN, including the Bank of Ghana and a couple of other government-based entities, the Agric insurance, enterprise there, and a number of them. And I think they are doing a fantastic job. And I think we can do much better because we have the human resource and we also have the financial resource if we are deploying it in the right direction.
Okay. Okay. Because of time, we will not be able to address all the questions that have been sent in. So even after this webinar, we will still have the time to address them even after this webinar. So for most of us, the participants that have sent in their questions, please do well to send us your email addresses so that we'll be able to address your questions even after. This is a question from me. Undeniably, there are huge financial resources needed in the agricultural value chain. So what are the available funding opportunities?
Jacob, you have come again. Do you want me to answer the question that is in the public space, or you want me to answer about my own thoughts about how agriculture should be financed? Because everybody knows about the commercial agri-credit scheme. Everybody knows about the MSM ETF. Everybody knows about the ACGSF, which is a credit guarantee fund. Everybody knows about the products, the credit guarantee products in NISAL. Everybody knows what is available. But asked a question earlier on. So if we are just going to be wasting people's times, if we start talking about available funding windows, everybody knows that you can get it on the internet. But my question is, are we funding what we are supposed to be funding? And the source of that fund, is it the best it can be to fund agriculture in Nigeria? And the mode of deploying that fund, is it the most optimal when you look at the coverage? We are a country of 200 million people. 67% of us are involved in agriculture. Over 90 million square kilometers of agriculture of land, 84 million hectares of available arable land, of which only 34 million of it is under cultivation. So the sheer spread of that means that if somebody sits somewhere and says, I'm administering a fund for agriculture, it will only get to certain categories of people. So things have gotten better. The TCF was applied for online. I think the new youth fund is also being, but in terms of efficiency, how efficient is that mode of deployment? So I see us leveraging existing national balance sheets of certain institutions to be able to fund agriculture, but is that the most efficient way of deploying capital? Then personally, I think that we have patronized the Nigerian farmer and the Nigerian agricultural sector for too long. We keep coming to them with these intervention windows that sound like we are doing you a favor. But hey, what exactly is that favor? I give you an example. The cooperative movement in Nigeria, which constitutes 30% of the Nigerian population, has 60 million members. Assuming that I find a way of convincing the convincing support behind asking them to invest 1,000 naira. I'm not asking them to dash 1,000 naira away. I'm saying invest 1,000 naira in an Agric fund that is targeted at cooperators, because that's the most efficient unit of dealing with farmers in a collective. If I call 1,000 naira in 60 million places, that's 60 billion naira. If I call 60 billion naira 4 times a year, because 1,000 naira is the kind of money that folks would lose, and I'm not saying I'm asking them to lose money, I'm just using it as an example, Abby, that folks may drop from people's pockets and they will not notice. Maybe that's a better analogy. If I call it 4 times a year, that will raise 240 billion naira. What is the size of the largest fund in agriculture today in Nigeria? 200 billion. So instead of patronizing these farmers that we are giving you intervention fund, why don't you enable an ecosystem by which they would be able to raise their money? Also, it is possible that if they know it is their money and it is not going to some briefcase, farmers who will not really do agriculture, but we are talking about that 67% on which we depend on. If you remember the cooperative movement of the 50s that operated in Southwest Nigeria, their levels of recovery was much higher than what we are getting on these our intervention funds. Why? Because the possibility of peer pressure made it possible for you to be assured that your money will be repaid. So instead of patronizing agriculture with these intervention funds, why not create the ecosystem by which the farmers themselves can be encouraged to raise the money themselves. But you see, it's about synergy. The power of the collective and the power of the individual, they are different things. So 240 billion is different from 1,000 naira that one person cultivates because of the kind of scale it immediately introduces. So I usually don't like talking about these intervention windows. People have their opinions about them. I have mine too, but I'm not sure it is for a forum like this. But I think what we should be looking at is not just intervention, is what other creative ways we can go about raising funding for agriculture. So please, let's not talk about existing intervention windows, Jake. Let's talk about what we can do differently from what is on ground.
Okay. Thank you, Mr. Bode, for sharing that valuable information about the funding opportunities. I'm a youth, so...
Who said so?
Yes, I'm a youth. So the question I want to ask, I want to ask a question. It is said that agriculture and its value chain is a game changer in terms of employment to take to agribusiness.
I didn't hear you said it's a game changer in terms of employment.
Yeah, employment.
Okay.
It has always been said that agriculture and its entire value chain is a game changer in terms of employment. So how do we encourage more youths to take to agribusiness?
Am I also allowed to ask you questions? Jacob, can I ask you questions? Would you want to be a farmer in the ilk of the farmers that you see when you go to your village?
Yes.
Yes, you will want to be.
Yeah.
You know that man still calls you to help with his child's school fees. And you see him with all of his clothes tattered and all that, after he has farmed for a season. And when he brings all that he has farmed together, it's not up to 50,000. Would you want to be that kind of farmer? The Nigerian youth.
That is not the kind of farmer I would like to be.
Now, the Nigerian youth is interested in agriculture. But the Nigerian youth, like you have seen from the agitations of the past few days, is not interested in being a martyr. He's not even interested in being a missionary. He wants prosperity. He wants opportunities open to him. He wants to live the kind of life that the young banker in Lagos or Port Harcourt, or maybe I should be talking about the oil engineer in Port Harcourt, lives, because they have the same brain. They were exposed to the same kind of education, which is supposed to open up opportunities for him. So if we make agriculture such a way that he can depend on it for his livelihood, then the Nigerian youth is willing to farm. But you see, he even has an advantage, because unlike the banker whose business is banking, or the oil engineer who sits on a rig or calculates some algorithms in the office, the Nigerian youth who goes into agriculture has the benefit of a value chain. It opens different nodes and different segments of the agriculture plan to him. So who is going to own the, what's it called? Who is going to own the storage we have been talking about? Who is going to be responsible for distributing the agricultural inputs? Who is going to be responsible for providing mechanization? who is going to be responsible for aggregating commodities for the market? It's the Nigerian youth. So until somebody sits down and begins to articulate a specific policy and strategy of how the youth can realistically key into this, and it is not by telling them that there's a fund somewhere they should go and apply for it. There has to be a strategy that he can trust to deploy. What we had most in the last couple of days from the existing agitation is that we don't trust you older people. But you don't manufacture trust. You need to demonstrate your willingness to be trusted and then back it with your actions. So we must be able to articulate a strategy, we must be able to articulate a policy and then deploy a strategy that they can see, Abby, and that strategy will show them the pathway to prosperity. Then the Nigerian youth will be interested. But it's not something that you just wish into existence. We have not done enough for that category of our demography.
Okay, there is a comment or rather a question. No, it's not a question, but a request from the Committee of VAT Chancellors.
I've sent a response that they should contact you they should obtain my contact from you.
Okay, that's fine. That's fine. Okay, so we are wrapping up the discussion. Bode, can you please just give us your final words, like closing remarks,
Well,
to our participants, please.
I would say the times we are in now presents unique opportunities for agriculture in Nigeria and for practitioners in that space. If you understand what you want to achieve by getting involved with that space. I will be the first person to tell you that it is not easy, but wherever you can go and you can define the problem, then you can also find a solution. So get involved with it, keep pushing it, no matter how difficult it may be, no matter how many curveballs you get thrown, keep pushing it. At some point it will give, but hold the focus. And God being our help, everything works out in the end.
Okay. Okay. It's time for us to have evaluation. We are going to launch the webinar evaluation. Please do well to give us your feedback. My colleague Adobe will be coordinating this. So please do well to give us your feedback. Your feedback will help us for us to improve in our subsequent webinar. Okay. Okay, thank you, Bode, for sharing your knowledge and experience with us. A lot. I've really learned a lot because Agric farming is an area which is of interest to me. And I believe that our participants have also taken away some key learning from this discussion. Many thanks to you, our esteemed participants. for joining us and making this discussion quite interactive. The recording of this discussion and previous webinars will be on our social media handles. So you can refer to it after and get more information, just in case if you missed anything. Okay, this is also to remind you that our webinar is a monthly event which holds every third Tuesday, and we encourage you to join us next month. As part of our drive to promote SME development, the 4th Akwa Ibom SME Roundtable we hold on Thursday, October 29th, 2020. Please visit our social media channels to register in order to leverage and maximize business opportunities. Thank you. We look forward to seeing you again in our next one. Thank you.